Hi guys, thanks for tuning in to another episode of the Ask Nugget Show, where I do my best to answer all the community's questions. This is going to be the first in a two-part special about trading, technical analysis and indicators. We get so many questions about all this, and I want to really break it down for you because there's so many different types of traders and there's so many different indicators or strategies that those traders will use. You can ask 10 different people what type of trader they are or what strategies they use, and they'll give you 10 different answers. And you can ask two people that use the same strategy whether two indicators work, and they'll tell you that no, that's rubbish, and the other one will tell you that yeah, I use that all the time, it's the only thing that I use to trade. So different people can both make money in using different methods, and I think people forget that. When people say I want to learn trading, they think I'm just going to do one course and that's going to teach me everything I need to know and I'm going to start making money straight away. So this is an art that you will always improve at, and I know people that have been trading for 40 years that continue to learn new things. I certainly continue to learn new things, and I love mixing a range of methods. I'd encourage you to learn the basics of all of these strategies, and one thing that I love about our community is that we have all those range from day traders to investors to those guys looking at fundamentals and news and sentiment. And if you can use that all together, that certainly gives you an edge and increases your chance of winning rather than someone that only knows one thing and knows it fairly well. So before we dive into it, again, I just want to encourage you to understand that this is a range from shorter to longer time frames, and the longer the time frame, the more weight you'll put in fundamentals as a general rule of thumb, versus shorter time frames, the more people tend to look at technical analysis and their indicators. So the first one that I want to talk about is the easiest to understand, and that's just the long-term investor. That's the sort of person that wants to buy some Bitcoin. They like the story, the macros behind it, the fundamentals, and they just want to leave it for a few years because they believe it will be higher in price. Now, their decision isn't really affected by technical analysis or indicators and charts. They're really looking at the fundamentals and why. What is Bitcoin? Why do I like it? That's their thesis. That leads us into the next one, which is a swing trader. Now, this is the sort of person that wants to put on positions that are likely to play out over the next days, weeks, sometimes months, but it's more reliant on technical analysis. They're probably starting to look at the charts or a story as well as the fundamentals. We're not just going to make a decision purely based on the fundamentals. For a lot of swing traders, they will know trading and they'll understand charts as well. They've still got a story, the thesis. They might be looking at things like sentiment and human emotion, but they're looking for that to play out over the sort of medium term in the future. Versus the next one we're going to look at, which is a day trader. Now that person's looking for things to play out that day or in the coming hours, maybe overnight, but a very short time frame. So again, they might be looking at human emotion, but it's more of a spike when everyone's euphoric about a certain coin, as we've seen a lot lately. It goes up and everyone thinks it's the next big thing, and then it comes crashing down. Or the other day we saw Ethereum selling off and all the headlines saying Ethereum is dead and it's a bloodbath, and that's the extreme in fear. So day traders and swing traders might both be using the same thing to look at, but with a different time frame, and they're probably both looking at the charts and technical levels and certain indicators, as well as taking notice of sentiment or their thesis that they want that day trade or swing trade to play out on. So the next one is the shortest possible time frame, and that's scalpers, and they're looking for very, very small percentages. They want to get in and out. Sometimes they'll be looking so granular in terms of what's the bid and the ask spread price on an exchange or on different exchanges, maybe some arbitrage there, but they're only looking for, pretty small gains. They want to get in and out of positions, tight stop losses. They definitely have that method down pat. They've got to be looking at the screen for long periods of time for when it gets to the exact levels they want. They've got a strategy, very reliant on technical analysis, and generally the shortest time frames if you're going to be scalping or taking advantage of arbitrage. That's probably a good segue into the next one, which is bots. Now, some people don't want to trade themselves, so they will program their bots to trade certain strategies. Now, that might involve arbitrage like we just spoke about. It might involve scalping little short moves. It might involve different indicators and, techniques that they have programmed into the bot to look for. So another style, if you don't really want to sit at the computer and trade yourself, to program some software or bots to do it for you. The final one I'll talk about, just something to be aware of, not something I would encourage you to do, is the pump and dump groups and individuals. Now, they accumulate a coin that doesn't have a lot of volume, tends to have smaller market caps, so it's easier to move the price. You know, someone's not going to be able to move the price of Bitcoin by posting something to their group or to a community. If it's a very small coin and few $1,000s or more can move the market, well, that's the type of coins these people look for. So if someone's telling you some coin is the next big hot thing, it's going to go to the moon, make sure you're not on the other side of the screen being the victim of a pump and dump. The people that get in early will accumulate at the low price. They'll try and plan your emotions and pump it up, and they'll exit when they've made money. And then the majority of people that come in, and they're the ones that push up the price, they get left holding the bag when it comes crashing back down after the pump and dumpers have sold their coins. So if you can't give a good fundamental reason or technical reason, a sentiment reason why you're investing in a coin, don't be led astray, guys, and just be aware that this is rife in the crypto space, so don't become a victim. Tying it all together, as I said before, I'd encourage you to learn a little bit about all these different styles. I encourage you to do courses. There's free ones out there. I'm a big advocate of the Chart Guys and Trader Cobb's courses. In our premium group, we have all sorts of traders, from day traders to swing traders, people talking about news and sentiment. And personally, the style that has made me so successful in my trading in the past couple of years is having a good understanding of a lot of these different techniques and trying to tie it all in together. And when they align, when technicals, fundamentals, and sentiment all align, that is when I have so much confidence in a trade, and I'll go heavy. Be patient. These things might only come along once in a few weeks or every few months. But if you can make huge percentage gains by being patient, that is something that's a lifelong skill to build, guys, that so many people want to learn. They think it's too hard or scary, but it's very doable for people that know nothing to learn. Be patient, refine your skills. There's practice accounts out there if you want to trade that way, but I definitely believe that learning trading and understanding charts is a lifelong skill. So I hope you've enjoyed part one, guys. In part two, I'm going to talk about all the different indicators and techniques that those traders actually use. So I hope you tune into that episode as well. Cheers.